financial inclusion is one of the most important aspects of any economy, including that of India. We are still striving for financial inclusion, and we have been doing since a long time. Now, to ensure that we have financial inclusion, the RBI set up a committee headed by Nachiket Mor, and this committee was Nachiket Mor Committee on Financial Inclusion. Now, what was the idea to have this committee? The idea was to have a committee which will analyze the present situation of financial inclusion in India and will give a roadmap as to how financial inclusion can be furthered in the Indian economy. Now, what was the main question or main historical background in front of this committee, or the problem that was there? So the problem that we had is financial inclusion. We needed to understand that financial inclusion does not merely means opening a bank account. So even though people had bank accounts, they were not using it. That means the financial inclusion was not there. At the same time, the presence of credit, you have an account but there is no way that you are going to get credit from anyone for that matter, right? Account without access to credit, insurance, pension, safe payments, as well as security, if all these things are not present, then what is even the use of the account? That is the problem that we were facing. Now further, you had a lot of migrants, lot of informal sector workers, right? They are anyhow outside the ambit of financial inclusion because their dealings happen in cash, and for cash transactions there is no need for someone. No, if I am a daily wage laborer and I am receiving cash, I don't even have to have a bank account, because the employer is not transferring money directly into my bank account, so it is only in the form of cash. And there can be other transactions also in form of cash which might have been taxed, but you cannot, because the government also does not know about it, so it is also going to impact the revenue of the government. That is why a key question arose in front of us. What was that? The question was, how can financial services become a tool for two things? One is empowerment and the other is inclusive growth. So, can financial inclusion also lead to empowerment of a particular section of the society or the nation, the people of the nation, and can it lead to inclusive growth or not? To analyze all this and to subsequently give a roadmap as to how to achieve it, Nachiket Mor Committee was established by the RBI. Now, in this video of our committee series of Indian economy reform series, we will see what this committee was, what is it was tasked with, what recommendations, the most important thing, what recommendations did it give, how did the government responded to the committee's recommendations, did it implement or not, and if yes, then through what means, and what was the criticism of this committee, plus is the committee's recommendation still relevant or not? All this and much more is what we will see. Before we move ahead, a special announcement with respect to the new batches that are starting at Legacy IS Academy. So we have regular as well as weekend batches. Now the regular batches, the next regular batch is going to start on 7th of September and then November, and you have weekend batches as well, specifically tailor-made for the working professionals, college-going aspirants. That starts in the month of October and then December. Now, once you enroll with us, there are a lot of benefits that you can get. There are a lot of advantages also you will have over others. Some of them are listed here. For example, comprehensive coverage of syllabus. It looks very simple, but various institutes will not even cover the syllabus properly. So here you will have comprehensive coverage of the syllabus, one-on-one mentorship and doubt solving session, plus you will have regular interactions with the educators you just saw over here. We have a maximum of only 40 students per batch, which helps us to pay attention more closely to each and every aspirant. Then there will be daily mains answer writing practice, and you will of course have the prelims as well as mains test series, so that we become your one-stop solution for your UPSC requirement. In addition to all this, current affairs, which is also a key aspect of UPSC preparation, we cover it in a 360-degree manner via the live classes in an integrated approach of prelims as well as mains. So if you want to enroll with us, you can simply download this app after scanning the QR code, or log on to the website or call on the numbers given over here. that's about it. Let's move ahead with respect to the committee. So why was the committee needed? First things first, limited reach. Limited reach of whom? Limited reach of the formal system, limited reach of the banking system. The bank's reach was limited. Their branches were in limited areas. The ATMs were also limited. So in remote areas, in rural areas, village areas, still kilometers and kilometers, you will not find a bank branch. So that was a concern. Geographical barriers was there, rural urban divide was there, and there was credit gap. Credit gap means you are not getting adequate, timely and cheap credit. Enough amount of credit is not there, you will not get in time, or even if you get it, it will not be cheap. Why? Because if you are taking credit from the informal sector, the interest rates would anyhow be high. So we need to formalize the economy, we need to ensure that the interest rates are also gone down, and the people can take loans are available adequately and at cheap rate as well, specifically for small businesses, for agriculture, for MSMEs, etc. Then financial vulnerability. See, there is a kind of poverty, type of poverty known as situational poverty. Now what is that poverty? Situational poverty is the poverty wherein because of certain situation you might go into poverty. You were not poor previously, but because of that situation you went back to poverty. Now in the same manner, medical emergency can be one such reason which can make you vulnerable. Because you may not have insurance, you may not have access to credit or insurance, you may go back into poverty or go into poverty because of that. So that means you are vulnerable. At the same time, limited product access. First of all, the number of products themselves are less, plus the access to that product is also less. Right? For example, a product, let's say insurance penetration in India is not much, whereas it is quite prevalent in Western world. So that is the idea of limited product access. And then of course there is a consumer risk. Consumer risk of fraud. If digital payment is there, there will be fraud. Consumer risk of mis-selling. Consumer risk of exploitation during lending of money, especially by the landlords, by people in the informal sector. So all this is the challenge. To resolve that, you have come up with a committee which will financially give us the roadmap to financially include each and every one of us, so that these issues can be resolved for us. Right? So let us now have a look at the committee itself. Right? So the committee, of course, name is Nachiket Mor Committee. So it is headed by Nachiket Mor, but there is an official name. What's that official name? The committee's official name is Committee on Comprehensive Financial Services for Small Businesses and Low Income Households. Why only low income households? Why not high income households? They are most probably majorly already financially included. That is why this constituted. Who constituted it? The Reserve Bank of India, that is RBI, in the year 2013. Chairman was Nachiket Mor. What was the core objective? It was to universal and meaningful access to financial services. Meaningful is also an important word. Simply giving the bank account does not make you financially included. The target groups we have already seen: low income households, small businesses, migrants, informal workers, the workers in the informal sector basically, or anyone who was excluded from the financial sector. Majorly the low income, poor, informal sector employees and MSMEs, etc. Small businesses, not MSMEs, small businesses will be a part of the target group. Does that mean it will specifically ensure that it should not help anyone else? No, nothing like that. It is just that this is the target group. Now, what were the key recommendations? That is important. So the very first recommendation that it gave was universal electronic bank account. Right? Universal electronic bank account. Now, why electronic bank account? Electronic bank account makes it easy. Electronic bank account makes it efficient, cost efficient, time efficient, easy to use, at your fingertip. That is why universal bank account. That means every adult should have a bank account. It will be authenticated via Aadhaar. This will ensure what? This will ensure KYC, know your customer. Second, payment access. Payment access means you should be able to access your account to make the payment or receive the payment. So payment point should be within the reach. Now whatever is that payment point, if it is the bank branch, if it is the ATM, it should be within reach. Banking correspondence mobile banking and digital channels. These things can ensure that the payment options or payment points are within the reach. How? Banking correspondents, they come to the household to open the account and for various XYZ reasons. So these are people physically reaching out to the bank account holders. But is that efficient? It's not that cost efficient as well. And how much you will cover, there is a limitation to that as well. So you have mobile banking, which should come so that people can use their mobile to do the banking, which will be done through various channels like UPI, Bheem app, GPay, Google Pay, etc., Phone Pay, etc., which we have now. Then the third is payments bank. It talked about payments bank. You may have heard about Airtel Payments Bank, Paytm Payments Bank. All these Paytm banks see their foundation being laid under the Nachiket Mor Committee. So wherein small savings and payments and remittances can come, right? Migrant workers, rural households, small businesses, etc. can take use of it. And no lending activity, right? The banks will not do lending activity. So does the Paytm or payments bank do not lend the money they have? They don't lend their money, they lend some other bank's money. They are simply intermediaries within that bank and you. Anyway, more on that we have covered in our static class as well on differentiated banking. What other recommendations? So first things first, over here, the fourth one, wholesale banks. Right, wholesale banks means a bank needs to have a wholesale supply of services, liquidity, credit support, right? To whom? To the institutions serving priority and underserved sectors. So banks should help those institutions who are in turn helping these sectors. Then priority sector lending reforms is also the need of the hour. Priority sector lending was present even before, but here the need of reform is what is being talked about. I hope that is clear. Now, what reforms are we looking at? Reforms which will make the priority sector lending more flexible. It should be outcome oriented. Outcome oriented means if you want more credit to flow into the agriculture, you need to see what results are coming, right? That is what is important. Focused on genuinely underserved sectors, right? For example, in agriculture also there are big farmers, big landlords. Now if you give your entire money of priority sector lending, which should be earmarked for agriculture, only to the big farmers, it's not going to make much sense. It also needs to go to small and marginal farmers. That is why focused on genuinely underserved sectors. And then finally you have complete financial ecosystem. Complete financial ecosystem means all the products and services should be present at one place. It should be complete so that one person can reap the benefits of all the services. For example, credit, insurance, pension, remittances, financial advice, everything should come from one person, one entity, one organization. Does it come now or not? Yes, it does. Yes, definitely it does, right? Even you would have in your bank, via your bank, your financial advisors, your bank representatives will keep on calling you. Okay, that you get, it's a nuisance at times, but that is there. Insurance facilities also provided. You open any bank's app, ICICI Bank, HDFC Bank, all these things are anyhow there, right? So credit plus insurance plus pension plus remittances and financial advice. Now this is what a comprehensive product will look like. Now let us see what was the government response. See, the government accepted the recommendations of the Nachiket Mor Committee and also implemented. How did they implement it? First things first. So Nachiket Mor Committee said that there needs to be differential banking, differentiated banking. Differentiated banking means banking for a specific sector, specific population, specific section of the society, right? This will lead to digital financial inclusion. To give effect to that, the government came up with payments bank, which are differentiated banks. Differentiated banks means they cater to a specific set of population and provide certain instruments or certain products only, not the universal products provided by the universal or normal banks that are there. So this is one thing. Then Pradhan Mantri Jan Dhan Yojana, it expanded the bank account ownership. Of course, just having bank account is not financial inclusion, but even to use it, first you need to have it. So that is where Pradhan Mantri Jan Dhan Yojana comes in. From 14 crore bank accounts, the number of bank accounts increased to 55 crores. Then Aadhaar enabled KYC, Aadhaar enabled verification, which will give you safety security for your account. So this Janadhan, Aadhaar and the mobile became the JAM Trinity. Very important, and it has been over 10 years, so mains related questions can be asked over here. In addition to this, you have mobile banking via the use of UPI. What is UPI? That is Unified Payment Interface, using which you can make the payment, receive the payment. What's the significant feature of it? A significant feature of UPI is the fact that to transfer the payment, you don't need a person's phone, you don't need a person's bank account. You don't even need the IFSC, that is Indian Financial System code. All you need is either their UPI ID or their phone number, of course linked to a bank account. Then banking correspondents access beyond traditional branches, so that the banking correspondents will reach out to the people to open their bank account and provide various other services. It was also continued. And direct benefit transfer. What is direct benefit transfer? When the government is providing subsidy in the form of cash, it will not give you cash in hand. It will transfer the money directly into the bank account online. Then financial inclusion. So finally, financial inclusion, all this will lead to financial inclusion, that is stronger, deeper and more inclusive economy or market or society, wherein the last person standing in the queue also is benefited by the products and services provided in the market. Okay, so this is what the government did. The government did a good job with respect to it. Now the result or the continuity or the outcome may be, of course, up and down. Okay, for example, in the bank accounts, Jandhan bank accounts, a lot of bank accounts are dormant, so we still need to do even better. Now what has been the impact? Let us look at the impact. Some, a lot of positive impacts. Very first, of course, it led to greater formal financial access. Formal credit was made available. Faster transfer of government benefits. The benefit, the subsidy, the direct benefit transfer comes even faster now directly into your bank account. Leakages have also been controlled. The corruption, the leakages have been controlled. Reduced independence on cash. Printing of currency itself is a cost on the RBI, so that also has been reduced. And the corruption, etc., happens a lot in cash. That has been reduced, not stopped but reduced. And expansion of digital payments, which we have seen, bringing in more transparency, more inclusion, and greater participation of women also is present in the formal banking system. So there has been really good impact of this. However, what is the criticism? One of the criticisms still remains, and that is, or one of the problems still remains, and that is a criticism as well, that account ownership is not equal to active use of financial services. So just because there are 55 crore accounts and Jandhan Yojana has helped a lot in opening such bank accounts, but crores of them are not being used, so that is still a concern. Small businesses face formal credit constraints. Right, formal credit constraints means, let's say if you somehow fail to pay one of the EMI or something like that, you are penalized, your credit score is down, you may not get the loan subsequently. A lot of issues come over here. Rural areas, they face the gap in the digital connectivity because of lack of electricity, lack of internet, so on and so forth. Digital expansion has increased our exposure to digital frauds, digital scams, and new types of digital frauds and scams are coming into picture, so that is a concern. Women have accounts, but they face what? Household and social constraint in financial control. They are not the one controlling it. Someone else, a male, a patriarch in their family might control it, might use it or misuse it. That is the idea. Then payments bank face business model and regulatory challenges. What are the challenges? That they are there to include financially poor people as well, low income people, etc. But if you give loan to low income people, then what will happen? The loan may not come back, so that can be a problem of rising NPAs. Inclusion without consumer protection can lead to mis-selling, over indebtedness and exploitation. See, what happens is, you are including the people. Now the people will have access to insurance, for example. They don't know which is good, which is bad, what is not. So they might be vulnerable to mis-selling. or manipulation, etc. You have given them the access, but the awareness, the knowledge, etc. needs to be still created. That is there. Now let us look at the legacy and the current relevance. Of course, it is quite relevant. We all know that banking penetration has increased. Okay. Also shifted focus from banking penetration to meaningful financial inclusion. Not just have a bank account, but use it. Established inclusion, it requires portfolio of financial services, not just deposits. So yes, we have a portfolio of services which is being provided, right? It influences India's differentiated banking and digital financial infrastructure. So differentiated banking, more payments. Payments bank have come. Airtel Payments Bank, Paytm Payments Bank, also small finance bank is also a result of this committee. So for financial inclusion, it is for the financial inclusion. Then you have the next one, that is consumer protection. So now consumer protection, it reinforced the importance of consumer protection and responsible finance as well. This is increasing day by day. Next, Nachiket Mor Committee's recommendations still remain relevant because the expansion of digital lending, UPI and fintech makes it more relevant. Financial inclusion is increasing by the day, and we also have to work towards safeguarding it. So what should be our way forward? We should basically move from account based to usage based inclusion. Just the number of accounts are increasing does not mean inclusion increases. Usage based inclusion parameter we should have. We should improve the credit to the backward sections of the society, socio-economically backward sections of the society, unbanked, underbanked areas and people, and strengthen digital lending, expand our insurance and pension penetration that is there, improve financial literacy, grievance redressal, educate people, make them aware, and strengthen our cyber security infrastructure as well, which will protect the citizens and make and facilitate more and more financial inclusion going forward. So that was Nachiket Mor Committee, its recommendation and even present relevance. That's about it. Make sure you subscribe to Legacy IAS Academy's YouTube channel. Hit that bell icon so you're notified when we are live or when we upload a video. That's about it. Thank you and all the best.